Good evening. Welcome to the live Facebook. That's right. Welcome everybody. And special thanks goes out to all our friends and members who's been supporting us. And I'd like to welcome you. A further continuation from where we left off last week. Now remember, last week we were talking about banking crisis. So a lot of people was asking, is there any stocks that you can buy or everything is collapsing? So tonight, definitely in this next 40 minutes, I will going to be break it down to you so you can able to determine what are those shares that you should be looking, especially an introduction to the tech sectors in here. Of course, you may be wondering, oh, Martin, isn't it tech is going through a sell down that what we are seeing in the US Federal Reserve? They're about to raise interest rate. And how about recession, which is on right now? So stay on, stay tuned, and stay on till the next 40 minutes, and I'll break it down for you here with live Facebook on Martin T.F. Wong in here. So thank you for coming tonight. And as usual, we want to go through some of the recap of what we have said before much earlier, and definitely this is no better way to do it. Now we all know that the banking crisis just started about 2 weeks ago, and really in this market, at least pretty much on the first quarter, it's coming to an end, right? We have the last 3 months, January, February and March, and we did see the rise of the 1st January. Then we did saw what we have seen with the SVB, the Silicon Valley banks in here, in the midst of the also the peace plan that's going on. So which is something good on the background, because if the peace, which is US wanted it, and if that peace were to come in place, then what we're going to get is probably an earlier finish to the war, which I always talk about this war really going further than 2 or 3 years, to be frank with you, because they wanted to prolong. But then of course the inflation and the human toll to the whole matter is going to be a thing. So right now, Credit Suisse is also in the ball game, and the latest you may have heard is also German bank, right? Of course, everyone is trying to create a crisis out from this and trying to add any banks that is worthwhile or not to just to get your attention. So again, Weizi, really, this is where we want to be looking into whether this is an an opportunity or a danger, depending on how you see. But tonight, I hope that I'm able to clarify it to you, some of the facts presented in here. Now, last week I also talked about danger. If you are danger, everything you see is likely to be market collapse. And then Lehman Brothers, especially this guy Larry McDonald, has been on the right-wing TV, and many of those people who doesn't like about how the market panned out, this is the one that will be listening. Whereas if you are an opportunity person like me, then you're looking reason to get back into the market, and definitely we're going to present some of those reasons with you tonight. Now, if you look at the banking crisis, it comes and go, going back to around 16 to the 17th century, the South Sea bubble. We all heard about the tulip mania in here. Then there's a panic in 1837, 57, 73, 93. So almost 10 to 15 years, you can see this cycle repeating. Of course, to the modern stock market era was 1929, the Great War crash. Then you have the saving and loan, 1980. Then the Asian financial crisis. Then you had the dot-bomb bust. And more recent, which I've started my career, was the global financial crisis, 2008 and 2009. And then we have the COVID-19, which causes this market to collapse. But yet, those of you who invested well would have stayed on and know that these are all the opportunity that we have seen in here. So having said that, our focus tonight will be on this item number 12 and 13, looking back to the global financial crisis, which is actually the subprime loan. Remember the subprime, the mortgage-backed security, MBS. That's the one really causing what we have seen so far in here. And a lot of people are paying a similarity to what we see today in 2023 to the global financial crisis in here. But of course, most important is the differentiation between these two that we have. You can see on both in here, the 2008 global financial crisis were all about the big banks. All right, were all about the big banks, where there were many weaknesses that were not addressed previously. But of course, after the 2008, few act have been put on, which I'm going to talk about, which is the Dodd-Frank Act, which is used to regulate many of those banks. Because before 2008, many banks are high flyer, especially one or two rogue trader in there can actually make the bill fail overnight. Remember Barings Bank? Yes, you all remember Barings Bank, right? Barings Bank was bought over by ING for £1. So these are the things. So going forward to 2023, we're going to look at some of the reasons why this time the banking crisis is only affecting the smaller and medium-sized bank, which is we are talking about less than 250 billion and below. Again, in US dollar. So some of these banks are falling to a confidence crisis, and this is also due to part of the interest rate rise that we've been seeing to counter the inflation. As we've seen, one of the steepest and fastest interest rate rise that we've seen, especially in year 2022, we see 75 basis point rise almost every 3 months or so. And that's what causes the bond market prices to drop, and that's what we've seen in here. So make no mistake, there is a differentiation between the 2008 and 2023 banking crisis in here. So if you look at it, today, the 2023 banking crisis is something I've talked about last week, so check out the video that I did. It's on the fractional reserve banking. What it simply says that the bank make money from our money. It's called the money multiplier, which means it take our deposit, a certain percentage of it, it's actually reinvested into the bank to make more money, which means it uses your money, your deposit money to make more money by loaning out in there. Now, some banks I do know, like UOB Bank or those very, very conservative banks like in Singapore, have a reserve requirement ratio about 40%. Some banks about 20%, depending how reckless is it. It's just that more conservative the better, which means they use many of these assets for better purposes or better reinvestment in here. So those banks are completely piled into a second person to a third person, and that's how they keep that money rolling. So eventually your 1,000 ringgit, as you can see, we did in this manner, will actually roll up to about 3,500. That's where the bank uses it in here. But the banks at the end of it just have a small reserve ratio to make the system work. So that's in short the what we call a fractional banking system. Now, the biggest bank failure since 2000 was the Washington Mutual back in 2008 for the global financial crisis. Of course, Lehman Brothers crash was a different thing. Remember, Lehman Brothers was a mortgage-backed security. Before they have any regulation rules, those guys will take up all this, what we call junk bond, junk loan, offering very high deposit. And there was a property speculation at that time, remember, right? And that what causes it. So, of course, if you look into a timeline, let me pay attention to the size of the bank. During the funding boom in 2021, which is the top one, at one point it has 200 billion. Now, early on, I talked about the 250 billion threshold. Anything above can be considered as banks that are generally too big to fall. But those banks that is below the 200 billion, 250 billion falls into what we call the smaller and medium-sized bank, which is generally doing a lot of this community banking, giving out loans, giving up a lot of the funding that you need. So what has actually transpired is a reason of the quick rise of the interest rate that we've seen. Right now, when we have interest rate that rises very quickly, what will happen? Bond prices will drop very, very fast, and that's what actually happened. So this company in 1983 in here was only focusing not on the community, but the community within the startup company, right? So it was providing some sort of financing in here to high network, right? So that in turn has caused that bank to go through what we call a run, a bank run, which means they do not have enough liquidity because more and more people were coming in to withdraw money, right? Remember, one day, right, 42 billion US dollar will withdraw. And remember, we showed you some of those spec last week, right? They don't have enough the cash to meet those kind of demand, and then it was run in the crisis. Now, why did it happen? Now, after 2008, you can see on the left-hand side of the picture is no other than President Obama. After the 2008-2009 crisis, they found out a lot of the banks were very reckless trader. Right? They are reckless trader, no stop loss, no risk management in here, and that's what causes the bank. As a result, jobs were lost, market collapse, people commit suicide, we can see a list of property failure and also people really having difficult time losing their jobs in here. So they enacted the Dodd-Frank Act in 2010. Now 2010, of course, that is almost 13 years ago. But do remember in 2006, Donald Trump, which is actually a Republican president, was elected. And what he did was that he actually loosened up that regulation of the Dodd-Frank Act in 2010. And really one of those was any banks, let me just repeat, any banks that is below 200 to 250 billion do not have to go through the kind of strict scrutiny or what we call the acid test that the banks are usually doing. Now repeat, right? Because previously Dodd-Frank Act applied to all banks. As long as they are 50 billion and above, they have to go through some sort of acid test, a lot of regulation in here. But of course, Donald Trump being a Republican in here, trying to loosen up a lot of regulation. And that's why he said that anything that falls below the 200 billion do not need to undergo such strict restriction, that many of these decisions that they were to take can be not scrutinized by the authority. And actually one of them, if you say, was to invest their short-term deposit into the Treasury yield bond. And what has happened, right? Those remember the Treasury yield bonds are very, very safe. But what has happened, we all know, right? These long-term Treasury yield bond, like 20 years and 10 years, will need to hold them for 10 years and 20 years. But we do know in 2023, many of the startup was facing what we call cash crunch, and they need those cash. So many of them were withdrawing from their account through SBB, and that trigger the bank run. Such a bank need to meet those obligations, and they have to sell the lot of the treasury bonds at a loss. And because as a loss, what we have seen in here, and people worried, the bank was already losing billions of dollars in here, and they're saying, hey, maybe they don't have money to pay many of the cash depositors in here. As such, they were falling. So one of those reasons, if you go back and analyze it, was the loosening of the regulation of the Dodd-Frank Act in 2010. Right. So if you look at the Dodd-Frank Act, I know there's a lot of text in here. I just want to pay attention to this. During the 2008, Donald Trump came in and amended the law that any small and mid-sized bank between 100 and 250 million will face lower scrutiny level. That is usually they don't have to follow many of these rules, and as such they're allowed to go in and do a lot, because like it or not, most Republicans and most businesses in US don't like to have regulations. And we all know, right, a lot of the US capitalism were driven by greed, and if you don't regulate them, a lot of this will take unnecessary, as we've seen in 2008, where we have the subprime and the mortgage-backed securities, which later we found out many of these backed securities are worthless or zero in value in here. All right, so the Dodd-Frank Act came in existence in 2010. Actually has a couple of series in here, including the whistleblower, financial stability, and consumer protectionism, which we're not going to go into detail. But because of the loosening of it, SBB can almost do anything that they want to. Now, one of the experts, John Coffey from Columbia, said that because of the loosening of the Dodd-Frank Act, they were able to run things and less exposed to the bank run, right? So if the Dodd Act were to be applied to this company just below 200 billion in here, they be a bit more regulated, a bit more strict, then they would not fall into what we've seen so far. So it was a case of poor or mismanagement by behalf of SVB management, investing their short-term deposit into long-term bond. It was just this. And of course, the contagion effect, which we talked about last week, right, spread over the Signature Bank, and then eventually we also have the Credit Suisse, which was a separate issue, because Credit Suisse was also going through some sort of So in the midst of all this banking crisis, which all comes in at the same time, people were looking for something that is not affected by the banking crisis, and yet because of the high inflation rate that we are faced, the opportunity that was presented is the interest rate hike, or the pause, what they call it, the pause in the interest rate, or another way to call it is the US pivot. When the US Fed pivot, that means they will start to make reversal chain. Now they are rising, right? 25 basis point, 75 basis point, right? Previously that we saw in 2022. Now they may just stop. And once they stop, they will pivot. They may even cut interest rate. Now we all know what interest rate does to technology stocks, isn't it? Right? Technology stocks are what we call cash generation in here, and they rely on cheap financing with low interest rate, and that's how it has been for the last few years in here. So anytime when we see a cut in interest rate, right, or a pause in interest rate, you will see many of the tech stocks will really zoom up over here. This is also due to the valuation, how you calculate the intrinsic value of the tech stocks. All right, so keep that in mind. So if you look back in the first quarter from the month of January to March in here, then you would seen the tech outlook wasn't do too well. So you look from the part, this is the January when it hit a high where they're likely to pause interest rate. This was where the market felt. Remember that they were talking about the inflation was greater than it is, and they might do a 50 basis point, a 75 basis point. But whole and beside, what you see is this red line here is the 200-day moving average. And at that time, I thought the 200-day moving average could have broken. Instead, it formed a double bottom, and that's a very, very strong double bottom. And such turned green pentagon. For those of you who's not following our green pentagon, this is one way you can capitalize on the uptrend when the green pentagon comes out, and also the red pentagon coming down. That's a signify where the trend may turn downwards in here. So what we have seen right now, on the Nasdaq, this was updated just yesterday, right, a day before, is that we have a situation where we have the double top, right? So the old top that you see here now is may form a support which able to push up. So from chart wise, it does look like the regime of the interest rate, which we did see in the month of January and February, right? But coming to the first week, or at least for month of April, we might see the Fed may do a Fed pivot, or may pause interest rate, and then the interest will move from in here. So that was the previous market outlook, and that's why we saw a lot of technical stocks were falling down but supported at 12,000. Now that resistance at 13,000. Breaking above, so watch out for that one. As long as the green pentagon is here, the market has more to the upside. But of course, you can see here uptrust, the last uptrust that he had in here, the market really came back down. The more recent one, which is about last week, that uptrust has a 2-bar reversal. Market started to hold back here. This was a very, very nice spring. And of course, tonight, as the market opened up 9:30, let me know how well is the Nasdaq doing, because many of you may be interested to see where the market is heading. So as such, if you look at the tech stocks, it was quite resilient. Just I showed you the chart in here. While the banking stock, starting from the 5th of March, just go all the way down. And like it or not, many people are saying that, is this the end of the financial crisis or the bank stock? Actually not. Because remember, we talked about the two sets of banks. The smaller scale bank, which is around the 200 billion and below. Then we talk about the bigger banks, right? The bigger banks, which is too big to fail. What are those banks? Like JP Morgan, Bank of America. And you have also, what is the bank that was owned by Warren Buffett? I can't remember that off my head. But those are the big banks. But I'm going to go through some of those banks later on that may give you an opportunity to buy right now, especially when the valuations are much lower in here. You can see the disparity between the banking stock, which is known as KBWB, used in the Bloomberg in here, compared to IXIC is the Nasdaq composite in here. So if you look at here, the Bursa technology was much worse off. Now let's go back to our Malaysian market in here, where many of you may be looking into it. And then you may ask this question in here, what is happening to our Bursa market in here? If you can see here, technology in Malaysia has no correlation to the US side. We have just seen just now the US technology stocks were doing much better than a bank. Whereas in here, you can see the purple color is finance. It only fall by 5%. The FVMCLKL minus 5%. And we all know FVMCLKL is like the US Dow Jones, which is mainly influenced by the finance. Whereas technology fall even more. So there is a disjustice, the injustice, we call it, the injustice that technology is not following what the US is definitely doing. So does this much worse off, or is it an opportunity? After all, Martin, you did say previously, the little brother, Malaysia Bursa technology, usually follow the big brother, the US technology sector in here. Is this an opportunity to be buying right now, or at least do some sort of bottom fishing in here? So it is definitely, if you compare the Bursa technology and versus the, we will use a proxy, which is the XLK tech ETF stocks. Okay, I will talk about the XL. So a good introduction to the overall technology sectors or stocks, especially in the US context in here, is to understand how the ETF, exchange traded fund XLK, XLK stands for technology, we're going to be looking into. So you can see from here, the Bursa is like comparing oranges to pineapple. They are two different things. Right now what we are seeing, I'm not sure in the coming quarter or maybe end of the year, it will sort of pair back, they'll pair back together, but right now it's like comparing orange to pineapple in here. They are really different. So you can see here the XLK here, which is the purple line, and then the Malaysian finance line, which is in the middle one, or the KLSE in here of the Bursa Malaysia index, but the technology is down here. So definitely from here you can see XLK since January is up plus 7% and technology is minus 9%. So if there is some going forward probability in here, then the movement of the Bursa technology, which is in here minus 9%, may just move straight up in here, playing catch up. So you are looking a possible 10% move for any of our local Malaysian stocks. All right, so that is why the technology stock sector in here does present. So it depends how I said early on. Do you see this as an opportunity, or do you see this as a crisis? I hope that my explanation so far, you can see the difference between the sector of the XLK, which is the US stock, compared to a technical stock, does let you see this is an opportunity rather than a crisis in here. All right, so having said that, let's look at some of the top US XLK tech ETF, which is usually a good starter for many beginners or new millennium looking into what kind of shares should I be looking. Now, of course, on the left hand side of the screen, many of you are familiar with the US FANG for the last couple of years ago, Facebook, which is now called Meta, Apple, Amazon, Netflix, and Google. Netflix has came back very strongly. Google is kind of struggling right now, especially now with the Chat GPT, which is backed by Microsoft. So that's what I tell you, look into Microsoft, right? So you can see from here, the Apple and Microsoft, Nvidia, and Visa, these are your top three tech sectors, which is to me very well balanced, the XLK in here, because you have the two credit cards, you have the Broadcom, which is making a lot of the Apple chip, Cisco, Accenture, Salesforce, and technology, but the main big component in here is Apple and Microsoft, which is almost 42%. So by just looking into investing the ETF XLK, you're already buying two of the very, very solid company in here. And as I said before, ETF is like buying a team rather than buying two individual players in here. So that's something to be think about in here. Now, of course, because of the Fed hope that many of the traders, including myself, to have a Fed pivot. Okay, a Fed pivot, as I said before, the definition is here that the Federal Reserve will start to go the other way. Right now, they are raising interest rate, they're pausing interest rate, and we might see when Fed pivot doing U-turn, then they will cut interest rate. Many of them have led to a plunge in the government bond yield because interest rates are dropping down in here, supporting the tech sector. So you can see from here, just starting on this couple big in here, remember we show you the double bottom, right? And that's where the S&P 500, and since then move up 5 or 6% in here. From our discussion last week, we talked about the US market in here. And those of you who remember, right, the yearly return of the Nasdaq and the S&P 500 after 1 year when it's down, what do we look for? You remember that? If not, check out that live FB. But if not, I'll tell you the answer. Usually when 1 year is down, 1 year is up. All right. So just take note. So this year is going to be a good year. So if you look at Apple in here, which is our proprietary Pentagon guider in here, since January, it has turned green Pentagon in here. And right now, the market has turned red previously. And then on the 18th of March in here, turned back green pentagon, but at the same time we saw the overhead here, the upthrust, and then the market started moving. So it's going to be kind of support that we're seeing in here, but again, charts still looking with the green pentagon, trends are going up. Of course, those are just on the technical side, and of course some of you are looking into it. If I'm going to be buying, what are the fundamental here we are talking about? Now if you look at the FA for Apple stocks, the market cap is 2.5 trillion. Really one of the biggest in here. Doesn't pay much of dividend, 0.58, but he has a price earning of 26 times for a growth stock. Now do take note, the S&P 500 is about at 16 times, okay, 16 times in here. And if you look at the banking stock, definitely most of them are falling even below 16, some at 10, some at 8. So those present and very undervalued stock. So FA of a 26 times PE in here, that's not too bad. With the almost $6 EPS earnings per share in here, return on equity about 147%, making it a SmartRobie rating of 4. Now for those who don't remember, 4 and above is investing in here, and it's a technology stock. Now also very important, I always look at the cash flows. Now the Apple cash flows are increasing annually. This is something you can also get from the trading view stock in here. You can see 2022 up 20% and the year before up 26%. So these guys are almost generating free cash flows are 100 billion. You can see here 100 billion a year. That is a money printing machine. No wonder your iPhone 14 and 13 cost more, right? I'm sure iPhone 15, when it comes out, it's going to be costing more. And this goes into the cash flow that is able to generate one huge cash generating monster in here. Now, of course, Apple is Apple without understanding the years, how much of the influence. If you look here, since 2006, the yearly return of Apple has been about 27% return. All right, 27% in return on average. Only last year, 2022, we saw that big fall that we see in here, minus 26%. And the last time we have 2018, remember that one, where we have the financial war, the trade war between US and China in here. That time was under the President Trump presidency that we see the crash between there has caused it also in here. But this one was caused by the interest rate hike, and right now the market has backed up to 20%. I do think that if you go back on a good year, 40, 60, 67, 31%, there is still a lot more run in there. Of course, just don't buy blindly. Use the green pentagon or use the VSA setup for those of you who are familiar with Apple in here. Now, of course, if you look in for Microsoft, is the next stocks we are looking at. Again, very similar. Turn green pentagon also in here. The high of 277, 280 actually. That's the resistance that we're saying. So who knows if tonight they're able to take out these three upthrusts that we see. You can see one here, another one here. If you want to see it better, download the SmartRobie app so you can see those upthrusts much better. If it's able to break through the 280 US dollar in here on the backdrop of a green pentagon, that's going to be very, really good. But keep in mind on the FA for Microsoft, you can see in here, pay a 1% dividend, slightly more pricey, price earning in here. Some of the members was telling me, should I get into Microsoft since now they have access to the ChatGPT and also ChatGPT 3 are incorporated into the Bing search. I've used it, right? The Bing search is really, really good. If you're not able to get into the ChatGPT apps, download the Bing into your phone or use the Bing search, and that's pretty good too. You can also use the chat. I use both the ChatGPT 3 and as well as the Bing chat, and both are equally good. And guess what? Both are also free. It makes you very, very productive. As a matter of fact, 50% of this PowerPoint presentation was done by ChatGPT, so making me much easier to able to enjoy and giving you straight facts. That's one of those powers of behind Microsoft, because right now Microsoft does own and have access to the proprietary of the ChatGPT in here. Of course, there are also competitors like Bard from Google and also Ernie from Baidu are coming up in here. But right now, the first to market that straight up is Microsoft, and Microsoft right now has give you the 40% return on equity. Again, a SmartRobie rating of 4. Not too bad, right? So these are two investment. If you don't want to get this, you can look into the XL XLK technology ETFs that will get you surely started in here. And of course, we want to look at the cash flow increasing annually in here. Again, not as much as Microsoft, which is generating almost 100 of billion. That's almost, if you look at it, it's almost 20 billion a month of cash flows. From the cash flows of Microsoft, about 90 billion every year. It's been increasing. So these are cash generating profits. So if you want to be buying one of those stocks like Microsoft, all right, let me just move to the side in here, has been returning positively even on 2018 where Apple was losing money. Only last year lost money minus 30%, but this year is already up 14%. And who knows, if you get a 35%, there is still another 20% upside from here with the 8 years of return of 177% return in here. Microsoft is definitely one. Of course, not to forget, where are our local boys, right? Our local boys, our tech boys, our Bursa tech boys. We got few of these are some of the large cap stock: Inari, Vitrox, Frontcan, and Uchitech. I'm sure some of you will be asking me, how about those IPO stock and some of those like DNO, Great Tech, MGRC, all those. But we want to look for those that is already been in the market for some time. At least we're able to see its track record, just like we have seen Apple and Microsoft over the years. So Uchitech, Frontcan, Vitrox, and Inari are one of those stocks that has a good history, especially from the FA side, to enable us to follow. Now, if you look at here, the Inari, you can see in here, as I said earlier on, you have seen the correlation, which is what I'm talking comparison of the orange versus the pineapple. Right now, Inari is still in red pentagon, and it does present to you a low risk entry. But some of you may have bought Inari early on and say, hey, should I be trading Inari again? Now, of course, those Inari that you have, you can still keep it for your long-term investment, but that doesn't mean you can't trade another account for the smaller short-term gain in here. So from here, you can see Inari is only a SMARTRobie of 2. Let me just get a return of equity of 14% compared to Microsoft and MSTF. It's a totally different thing in here. 9 billion market cap in here, with the price earning of 24 times, so about the same as Apple. But more importantly is the chart wise. You can see, right, chart wise, Apple is forming a double bottom, lot of resistance, but in here you can see the stocks is already taken out the UT. So this thing is going to be moved, baby. All right, and also pay a 4% dividend. All right, now if you look at the Frontcan, another stock right at the bottom too. I've been going through the yellow trend zone or the red pentagon. Of course, some of you who wanted to trade this, just use the red pentagon. You can get a copy of the chart and all the timing and set up also the watch list in the SmartRobie apps in here. And right now, just waiting for the market to turn green pentagon in here, having a very low risk return in here. And this stock also pay a 1.3 dividend, but having said that, the price earning is about 38 times, giving it a bit more pricey. That's why you see the SmartRobie has no rating in here. 4.7 billion market cap, really huge cap, so it's quite liquid. You can get in and get out easily with a return of equity of 22%. Now, if you look not far away is Vitrox. We just turned green pentagon. Now, notice, right? Vitrox has turned green pentagon. Frontcan hasn't turned yet. Inari hasn't turned yet. So again, this one is starting to move very nicely, but it is a 788 stock. 7 ringgit 88, 7.4 billion with a price earning of 37 times, so slightly more pricey compared to what we've seen for the other two stocks. 22% ROE in here, and pay a 0.59% dividend in here. And last but not least, one of the highest SmartRobie rating of 6 in here with the highest dividend is the 6.25% dividend, better than what you're getting in the banks, but the market cap is only 1.5 billion. PE is very, very low, all right? Not like the PE that we've seen for Uchitech, Frontcan, and even Microsoft in here. This one is really a bargain, but check out the return on equity for the 56%, 57% in here, and that is making my tongue coming up with saliva. Uchitech in here, still a continuing good market in here. So of all this information that we're having, how do we filter it? I think a lot of time, depending who you listen to, we get away with the kind of background that we have, the risk tolerance, especially also our education. So sometimes all the information can be coming also from Martin, also from Zach, also from the coaches that we have in here, and also some of the influencer YouTubers in here. I am getting an information overload. So the question is, how do you filter them? So many times we always tell people, and those of you who are listening tonight, the financial education is very important, because that one, the financial education, can turn your filter, right? The filter that you see how things, accepting the facts, right? Avoiding all the fake news, right? And knowing them and make the right decision. So definitely investing in your financial education can turn things they used to do into a window opportunity. Now, when I say investing in financial education, doesn't mean just come and listen and that's all you do, but it's also involving getting a bit of mental challenge in here, putting some money. Of course, some money is important, because when you put money, then you take yourself more serious into that, right? So this is where the education is important, just like you're coming right now and spending time in here for that one. So my takeaway tonight is very, very short. As I said before, those are the tech stocks that I generally like in here, and I hope that you can also use them, do a bit of your homework in here. So in selecting the technology stock, more important is understanding these four. Of course, there are many of them, but I just want to sum it in here. The strong management, the SC, SC stands for sustainable competitive advantages, right? Growth potential, and then the third one is valuation. Am I paying or not? So when we go through this, let's go through one of them. All right, you saw those chart that we have in here. Inari, Vitrox, and Uchitech. Those are the logo we have in here. Management is very important, especially we all know about the US management like Tim Cook. Before that was Steve Jobs. But those of you who are investing in the technology, take time to go and understand what this CEO does. What is his background in here? Just do a Google search, you can find it in here. It's not that difficult. And right now we have even ChatGPT, right? Yep. ChatGPT make it so much easier to do your research and can even tell you whether this stock is good to buy or not. So use that experience, as I said before, just do it, So the experience and capable management, and then the competitive advantages is this company just doing it itself? Why does it have this? And how about the margin? Can someone replicate whatever is doing? Then next, the third one is the growth potential, right? Growth potential is looking to how much then the company grow its revenue. Of course, if you go into the trading view, you're able to see those growth manually, whether they're growing the margins or growing the sales in here, right? So those are one key factor in here. And what kind of product or segments are they going to, and do you see there is a trend to that? I think that's also important when it comes to in here. And remember back in 2020 when there was a super growth we saw on Top Glove, right? And all of a sudden, where is all the growth? Right? Because supplier all came in, anybody can make rubber glove in here. So the competitive advantage that Top Glove, Kosan, and also Hatalega has was short-lived, and many of the competitors from Thailand, even some of the locals, One Property, and also China has come in and hack away a lot of the margins, and as such we have seen the drop on the ASP, the average selling price. Only recent when Top Glove started to raise their ASP prices, you can see they have a rebound on those rubber glove stocks in here. So those are some of the valuation things that you need to go to. But for simplicity tonight, looking at the valuation in here, PE is a very good sign, looking at how much are you paying. And we have seen Uchitech at 11 times PE in here, but probably given the take of the growth in terms of the revenue or EPS may not be high as Frontcan or Vitrox or Inari in here. But do take note, from the chart wise we have seen earlier on, a lot of them are still in the red pentagon in here, so you just need to wait for the green pentagon to come, and they will come, especially when I said earlier on my live Facebook and also on my podcast, the KLCI, we've been down for 37 bars, right? 37 bars, almost 57 days, and the longest time when we had this was in August. Okay, August, and only today the green pentagon came, right? Those of you following me would have known that, as I updated all our members and also the public in here. So finally, after 57 days, almost 2 months, we have a green pentagon. Again, many of you are asking how much and how high can this go? Now, if you look back on the old green pentagon, we may see a bit of run tomorrow on. All depends on tonight, definitely in here. But we do see that run. Green pentagon is a good sign that things are turning from worse to in here. Now, if you are short on many of the futures in here, you want to start turning long for that one. So right now, my take is have the mindset, as I said before, the failure in our filter. Now, if you get your financial education right in here, you want to be able to see opportunity, just like what Warren Buffett said, be fearful when others and be greedy when others are fearful. So right now, I'm seeing a lot of fearful people out there. So this is the time where you need to step up, right, and take out the most. So how do you buy the undervalued technology stocks? Definitely identifying the market bottom. We have seen, right, those stocks Inari front end, right, especially on the left hand side, those charts already. But on the US one, you can see from here, they are ready to break up and run right now. So look at the who is in control right now, right? Do we see sign of strength, sign of weakness in here? But of course, all hints point to Inari and Franken able to make up the move in here. But we still need that confirmation in here, and perhaps maybe look at some news that's coming out from Inari in here, or you might just want to wait for the green pentagon and get ready for those kind of stocks in here. For those of you who have your Apple or your Microsoft, continue to run it higher and so forth in here. And of course, you can get those, definitely all of them free of charge using the SmartRobie apps. You can get those interactive chart right now today in here. So as a summary for my talk for tonight, and we're going to open up for some questions in here, and such that I do think there are a lot of undervalued banking stock right now. It's bottom fishing, right? As I said before, once the banking contagion can be contained, then you're going to see a lot of the banking stock moving up in here. But take note, there is a huge differentiation between the 2008 financial crisis and today 2023, which I already sum up for you, differentiation between the smaller and the medium-sized bank. Of course, you may also ask the question, what happened if we spread to the big banks, which is too big to fail, right? But we do have the Dodd-Frank Act in place, so those banks have to comply to that one. And that's why a lot of the Federal Reserve and Jamie Dimon, US Fed's Janet Yellen, these gang of three are piling up together how to resolve this, so to make sure we don't have another global financial crisis that we see in here. So right now that banks are all undervalued in here. So again, I do think that our Malaysian banks will also move too, such that we did see the green pentagon or green pentagon already move, right? So the banks is going to play catch up too, right? How much that we have to see, but more importantly, check out the VSA 360 if you have not, because we want to be watching the foreign funds flow in here, right? So then second is the fairly priced technology stocks. Again, I do think that the US technology are fairly priced. They're not too expensive. They are around 26 times we saw just now in here. Microsoft is about 33, 34 times in here. But this is on betting that the 2023 US Federal Reserve may pause interest rate, or maybe just have one or two more minor rate hike. Another two more 25 basis points. Because right now, the US Federal Reserve, Jerome Powell, it's a lot of pressure in here not to overdo the rescue. They are going into rescuing the small and medium banking in here to make sure they don't cause a run in the banking crisis and confidence, which will spread to the big bank, and that's one of the things concern there. So it is likely for they will do the most is a minor rate hike, and that's why technology stocks will move up in here. And third one, I think it's very important, as I said before, the financial education to really stamp out a lot of the ignorance that we have, and that filter, right, able to absorb the right information is important in here, understanding and taking action in here. And of course, last but not least, learn how VSA work. For those of you, you can also follow Zach on Monday and also our Facebook, many of our YouTube, including tonight, to understand how we will, or join our Trade VSA premium membership in here, where you get access to the coaches, myself, and also all our plug-in indicator in here with the special winning trade strategy of VSA 360 in here. And of course, finally, right now, you need to be greedy when others are fearful in here. All right, so that's all from me in here. Martin, the inventor of the Pentagon Guider in here, getting our trademark very soon. And so we got our trademark, and we are pending our patent for our pendant guider in here, and hopefully everything turns out right. We were able to get our first license in the not too distant future. So that's all we have for tonight. Thank you for coming. We're keeping it to 40 minutes in here. I welcome the company of you, and don't forget to join our Telegram chat room to get all stock market information. And if you have any question, you want to hold on, but I think tonight was just more of getting the facts, so you're able to go out and make an informed decision on the kind of stocks that you have. If you already bought those two, then the next question is, can we turn our attention to the local Bursa technology sectors, which I presented you those opportunities that you've seen in here. All right, so if you have any question in here, thank you for coming, and I'll see you on Friday on our breakfast show. And don't forget, and also join our Telegram chat room every Monday and Friday for updates on the market. Thank you and good night.